excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Good morning, you're watching News 9. I'm Karthik Malhotra, and stories from the world of business, the economy, as well as the stock markets from India and around the world coming up for you right here on the Morning Brief at 9. This is Morning Brief at 9 right here on News 9. First up, let's bring you the headlines that we're tracking for you. The Reserve Bank of India has headroom to cut interest rates further as inflation stays below 4% and oil prices remain subdued, says the Finance Ministry. India is likely to delay the national retail trade policy in bid to ease tensions with the United States as bilateral trade talks enter the final phase, benefiting both domestic and US retail giants. Tata Consultancy Services faces government scrutiny over plan to lay off more than 12,000 employees as IT Ministry monitors situation. Employee union teams move illegal and warns of nationwide protests amid rising global tech layoffs. Nayara Energy sues Microsoft in Delhi High Court over suspension of critical services linked to the European Union sanctions. Warns move threatens India's energy security. China's rare earth export ban to hit 5 key Indian sectors, warns State Bank of India, calls for urgent local exploration as imports surge and supply risks grow. India's industrial output growth slows to 10-month low of just 1.5% in June 2025 as mining and power sectors take hit from early monsoon. Manufacturing, on the other hand, sees slight improvement. The Directorate General of Civil Aviation initiates enforcement action against Air India over overdue emergency slide inspection. Aircraft grounded. Minister cites safety lapse during audit amid rising security after the Air India 171 Ahmedabad crash. Elon Musk's Starlink gets clearance to launch satellite internet in India with 20 lakh user cap. Government says high cost, limited reach pose no threat to telecom players like BSNL, Jio as well as Airtel. And Delhi may get its own late-night food market as NDMC plans post-10 p.m. culinary zone inspired by Indore's Chhappan Dukan with backing from Minister Parvesh Verma to boost safe and vibrant nightlife in the capital. The Finance Ministry has said that the Reserve Bank of India may have more space to cut interest rates in the coming months as inflation is now well below the RBI's target. Retail inflation, which shows how fast prices of everyday things are rising, has been under 4% since the month of February this year. In fact, in the month of May, it fell to just 2.82%, the lowest in over 6 years. As prices are rising slowly, the government believes the RBI can safely bring down interest rates even more. Remember, when interest rates go down, it becomes cheaper to borrow money, which can boost spending and help businesses grow. Now, the next important RBI meeting to decide interest rates is scheduled between August 4th and August 6th. Now, the RBI earlier said it expects inflation to be around 3.4% in the current quarter, that's the July to September period. But so far, inflation has stayed even lower. In fact, the Finance Ministry says this year's average inflation may be below the RBI's estimate of 3.7%. Now, one reason why inflation is staying low is that global oil prices are not rising. Oil-producing countries like OPEC have increased their production more than expected, which helps keep fuel prices stable. Now, on the spending side too, the report says both the centre and state governments are continuing to invest in infrastructure while keeping their budgets under control. The union government is likely to delay the proposed national retail trade policy, a move seen as an effort to ease tensions with Washington as negotiations for the India-US bilateral trade agreement enter the final stretch. Now, the retail policy, which was first proposed in 2019, was meant to address structural challenges faced by brick-and-mortar traders and small businesses due to rising digitization and platform-driven commerce. Now, shelving the policy may indirectly benefit major US-based retail giants, particularly e-commerce platforms and global retail chains like Walmart, by allowing them to continue operating in India without additional regulatory oversight. Domestic retail chains like D-Mart, owned by Avenue Supermart, Reliance Retail and Tata Retail, would also benefit from the policy shift. With India's e-commerce policy originally due in 2023 pushed to the sidelines, government officials said a separate retail policy is no longer necessary. Remember, a US team of negotiators is scheduled to visit New Delhi the second week of August to resolve the deadlock over continuous and contentious issues in the talks in the India-US bilateral. India has taken several steps, starting with the union budget, to create a better framework for trade. However, the US still seems mainly focused on increasing its exports to India, especially genetically modified maize and soybean products. The American dairy industry is also trying to get access to India's large consumer market. And in a major development, the Union IT Ministry is now closely tracking the situation as Tata Consultancy Services after the company announced its plans to lay off more than 12,000 employees globally this year. Now, this decision comes as part of what TCS calls a strategy to become a future-ready organization focusing on technology, artificial intelligence and workforce changes. The impact is expected to be felt mostly in middle and senior level roles across its global operations. According to media reports, the IT Ministry is in regular contact with TCS and is looking into the reasons behind the layoffs. The ministry is said to be concerned about the scale and legality of this move. In a strong response, the IT Employees Union, NITES, has written to Labour Minister Mansukh Mandavia calling the move unethical, inhumane as well as illegal. They urged the government to issue a formal notice to TCS seeking an explanation. According to NITES, TCS has violated labour laws, claiming that no proper notice, compensation or official communication was given to the retrenched employees. They argued that this is not restructuring but mass sacking. They have also asked the government to stop the layoffs immediately, reinstate the affected staff and investigate similar actions by the company in the past. Now, NITES has even warned of nationwide protests if the issue is not addressed soon. Remember, on Monday, TCS shares dropped by 1.76% on the Bombay Stock Exchange as news of job cuts sent shockwaves across the tech industry. Meanwhile, experts say the decision could trigger fresh anxiety in the IT sector, which is already under pressure due to global economic challenges and geopolitical uncertainty. And it's not just the employees' union sounding the alarm. IT industry body NASSCOM also says that the tech industry is at an inflection point. NASSCOM says some transitions and workforce rationalization are expected in the near term as organizations shift towards product-aligned delivery models in response to increasing client demands for agility, innovation as well as speed. Now, without directly mentioning TCS, NASSCOM in a statement titled Workforce Realignment and Industry Transformation highlighted that the tech industry is currently at an inflection point, with AI and automation becoming central to business operations. It said over the next several months, it anticipates transitions as organizations pivot towards product-aligned delivery models driven by rising client expectations around agility, innovation and speed. That shift is likely to reshape traditional service delivery frameworks and, in the near term, may lead to some workforce rationalization as traditional skill sets get reevaluated. NASSCOM also emphasized that deeper collaboration among industry, academia and government is essential to bridge the skill gap and embed talent development, which will sustain India's leadership in the AI era. Quarter of FY25, more than 1.5 million professionals have been trained in AI and Gen AI skills across different levels. Now, notably, advanced AI skilling initiatives have reached over 95,000 employees in leading listed firms covering AI native cloud, embedded AI and applied intelligence certifications. NASSCOM further says that hiring trends will continue to evolve with increasing demand for deep specialized expertise. It says there is no one-size-fits-all solution and each enterprise will navigate this transition based on its own unique strategic needs. A major standoff is developing between Indian energy giant Nayara Energy and global tech major Microsoft. Nayara, which runs one of India's biggest private oil refineries, has taken legal action after Microsoft suddenly suspended access to critical digital services. In a statement released on Monday, Nayara Energy said Microsoft's move was in response to European Union sanctions against its refinery at Vadinagar in Gujarat. The company, partly owned by Russian oil firm Rosneft, has now filed a petition in the Delhi High Court asking for urgent intervention to restore services. According to Nayara, Microsoft is restricting the company's access to its own data, proprietary tools and software products, even though these were brought under fully paid licenses. Nayara says the US-based tech giant acted without any legal obligation under Indian or US laws, based solely on its own interpretation of EU sanctions. Nayara said there was no prior warning or consultation from Microsoft before the services were cut off. The fear now is that such disruptions could affect India's energy supply chain, especially if Nayara is unable to maintain operations. Remember, Nayara Energy owns the massive Vadinagar refinery, which can process about 20 million tons of crude oil each year. It also operates a wide fuel retail network across the country. Earlier this month, the European Union included Nayara's refinery in the listed and the latest round of sanctions against Russia. Now, these measures are aimed at limiting global trade in Russian energy following its war with Ukraine. The sanctions pack restrictions on shipping and insurance and a lower price cap on Russian crude. Now, since the sanctions were announced, oil traders and shipping firms have begun distancing themselves from Nayara. 2 tankers reportedly declined to lift oil cargo from its port, and a recent tender to export naphtha ended without any buyers. And China's recent move to ban the export of rare earth minerals could have a major impact on India's economy, especially its key manufacturing sectors. According to a report by economists at the State Bank of India, this ban will affect domestic production and exports across 5 major sectors, which are transport equipment, basic metals, machinery, construction, and electrical and electronics. Now, rare earths are essential raw material used in making magnets, batteries, and other high-tech products. India imported rare earths worth nearly $32 million, and rare earth magnets were $291 million in this financial year, and the number is growing fast. The SBI report clearly says that China dominates India's supply of rare earth minerals and compounds, and the ban could put pressure on Indian manufacturers who rely on them. The report warns that even banks and financial institutions may feel the heat, as any slowdown in production and exports could affect overall economic activity. SBI economists suggest that Indian states need to step up effort to explore and extract rare earth minerals within the country. And on to some macroeconomic data. Now, India's industrial growth has slowed sharply, with factory output dropping to a 10-month low of just 1.5% in the month of June 2025, according to data released by the National Statistics Office on Monday. Now, the slowdown was largely driven by weak performance in the mining and power sectors, both of which were impacted by the early arrival of monsoon and heavy rains. The Index of Industrial Production, or IIP, had shown a much stronger growth of 4.9% in June last year. So the fall this year marks a major dip. The government also revised the May 2025 growth figure upward to 1.9% from the earlier estimate of 1.2%, offering some relief but not enough to make up for the June decline. Now, looking at the sectors individually, mining output shrank by 8.7% in June, a major turnaround from the 10.3% growth seen in the same period last year. Power generation also dropped by 2.6% after having grown by 8.6% in June of 2024. The manufacturing sector, on the other hand, grew slightly to 3.9% compared to 3.5% last year. Now, over the broader April to June quarter of the current financial year, industrial production has grown by just 2%, which is less than half the 5.4% growth recorded during the same period 1 year ago. Aviation regulator DGCA has launched enforcement action against Air India after it found that one of the airline's aircraft was flying with an overdue emergency slide inspection, which is a key safety requirement. Union Minister of State for Civil Aviation Muralidhar Mohol informed the Rajya Sabha on Monday that the DGCA discovered the lapse during an audit of Air India's operations. As soon as the issue was flagged, the aircraft in question was immediately grounded until the emergency slide was properly checked and, if required, fixed. The minister said that the enforcement action has been initiated not just against Air India, but also against personnel responsible as per the DGCA's enforcement policy. However, he did not share the exact dates of the audit or when the enforcement action began. Remember, Air India has recently come under the scanner for several safety and maintenance-related issues. On June 12th, a tragic crash involving Air India flight AI 171 claimed 260 lives after the aircraft, a Boeing 7878, crashed into a building soon after takeoff from Ahmedabad. Minister Mohol said the DGCA conducts regular surveillance, surprise checks and night inspections to ensure all airlines, including Air India, follow the required safety norms. If violations are found, the DGCA takes strict enforcement action, including warnings, suspensions, cancellations or financial penalties. Union Minister for Telecom has said that the Elon Musk-owned Starlink will be allowed to provide only 20 lakh satellite internet connections across India. The announcement puts a clear limit on the company's expansion in the country and may come as a relief to existing telecom players, including state-run BSNL. Now, speaking on Monday, the minister said Starlink will offer internet speeds of up to 200 Mbps, but this won't pose a threat to regular telecom services. He also pointed out that the high cost of Starlink satellite internet, possibly up to 3,000 rupees per month, means it will mostly appeal to users in rural or remote areas with limited access to broadband. The comments come during a review meeting of BSNL, where the minister said that BSNL's 4G rollout is nearly complete and there are no plans to raise tariffs as of now. Earlier this month, regulatory body InSpaces cleared Starlink to begin offering satellite-based internet in India. Starlink now becomes the third player after OneWeb and Jio to get the government's go-ahead for satellite communication or SATCOM services. Remember, both Jio and Airtel have partnered with Starlink to help launch its services using their existing dealer networks. India's digital payment revolution continues to grow at a massive scale. Over the past 6 years, from FY19 to FY25, the country has logged more than 65,000 crore digital payment transactions, amounting to a whopping 12,000 lakh crore rupees in value. Minister of State for Finance Pankaj Chaudhary, while addressing the Lok Sabha on Monday, said that the growth of digital payments is no longer limited to metro cities. It is now expanding into smaller towns and rural areas, helping reduce the economy's dependence on cash and bringing more people into the formal financial system. Now, to boost this trend, the government has been working with key stakeholders, including the Reserve Bank of India, NPCI, banks, fintech companies and state governments, to make digital payments easier and more accessible. In fact, in 2021, the RBI set up a special fund called the Payments Infrastructure Development Fund, or PIDF, to deploy digital payment acceptance tools in underserved regions like small towns, the Northeast and Jammu and Kashmir. As of May 31st this year, the fund has helped create nearly 4.77 crore digital touchpoints across India. The government is also helping small businesses and MSMEs adopt digital systems by offering various incentives. These include cashback for low-value UPI transactions, a trade receivables discounting system to help with working capital, and lower charges on debit card payments. Time for a short break, but coming up on the other side, Amrish Baliga will be here to help us decode, well, will markets break the jinx after investors lost nearly 12,000 crore rupees in just 3 trading sessions? That and more on the other side. You're watching Morning Brief at 9.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत
खूबसूरत सी तुम कोई चिंता करो, पीछे भरोसा खड़ा है तुम्हारे, तुम नया कल बनाते रहो।
जब कोई हमारी बाकी चिंताओं को संभाल लेता है तो हम कर पाते हैं खूबसूरत सी कोई चिंता। टाटा कैपिटल में हम आपकी हर फाइनेंशियल चिंता को संभाल लेते हैं ताकि आप करें सिर्फ खूबसूरत चिंताएं।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
ये शहर भी तो अंगना तेरा मेरा, इसको भी
Birla Opus Paints.
Go condoms?
It's over there.
क्या ये different sizes में आता है?
Actually sir, size matter नहीं करता.
तो फिर क्या matter करता है?
The hardness
Of the condom.
of what's inside.
For the first time ever, presenting Hard Rock Gel, the hardness gel for men.
अब free हर score condoms के 10 पैक के साथ.
Welcome back. You're watching Morning Brief at 9 right here on News 9. Let's bring you all the action from the Lal Street. But before that, a quick look at how Asian markets are doing this morning. Remember, there's that all-important meeting between US and China in Sweden, and there are hopes of some sort of a trade deal being inked between US and China. And that is something which is not really working very well on Asian markets this morning. Perhaps they were expecting the deal to come through sooner, or they could be expecting a further delay. So the Hang Seng, Hong Kong's main index, is down more than 1% in trade, and that's also visible, in fact, across Taiwan's stock exchange, which is down almost 0.85% or so in trade this morning. Meanwhile, better news coming from South Korea, as the index is in the green this morning, up about 0.6% or so. Meanwhile, Japan continues to be reeling under pressure. Remember, Japanese stocks were down about 1% or so yesterday, and even this morning they're on a losing spree, down about 0.9%. Let's shift focus to India. Remember, there were 3 straight trading sessions where investors lost money, and that momentum continues to be visible on the Sensex and Nifty this morning as well. Well, we are not seeing very deep cuts on Indian markets, but we are still seeing a little bit of pain, and markets still reeling under some pressure. In fact, right now, Sensex and Nifty are both down about 0.2 percentage point each. The Nifty 50 is now well below the 25,000 levels. In fact, even under the 24,800 levels, which it did fall below even yesterday. Meanwhile, Sensex is down about 81,270 odd levels. Remember, in trade yesterday, there were massive swings, and the Sensex had lost about 700 odd points. Volatility in the Indian markets is a little higher. It's at about 11.6, up about 3.25% or so. Remember, the sector that really pulled down markets yesterday was the IT sector, but we are seeing some sort of a balance in the IT sector this morning. Let's pull up the Nifty 50 heat map and try and see where is the action coming in from this morning. TCS continues to be down about 1/3% or so. Remember, the stock had lost about 1.7% in trade yesterday. This morning, it's down just about 0.3%. Better news coming in fact, from HCL Tech, which is up about 0.5 percentage point. Even Tech Mahindra slightly in the green, up about 0.12% or so. A mixed response in the banking side. HDFC, ICICI Bank, the two heavyweights are down in trade, but we are seeing Kotak Bank is slightly up. Axis Bank is also up about 0.13% or so. Reliance Energy is recovering some of the losses that it saw last week. The stock is up about 0.6%. There's a lot happening in the Indian markets. Let's decode that with Amrish Baliga, who joins us on the show this morning. Mr. Baliga, good morning. Great to have you back with us. There's a lot of data and there's a lot of comparison which is being made in the Indian stock markets. Now, the Sensex fell nearly 700 points in trade yesterday, closing at below the 81,000 level. Now, that's a good 450 odd points lower than the 81,332 points exactly 1 year ago. And investors in the last 1 year have theoretically lost money on 30 of India's biggest companies. That's in a 1 year period. And in just the last 3 trading sessions until close of trading yesterday, investors had lost as much as 12 lakh crore rupees, making the pain quite worse on an already somber year. What should investors do at this moment, seeing their markets and their investments dip day after day?
See, I would say there's another way to look at the data, because if you see April till about a week back, 10 days back, I mean, we had an extremely good move in the market, about 16-17% move from the sort of March, April lows. So what I see currently is a healthy correction from the higher levels which we had seen a few weeks back. And markets really don't like uncertainty. And that's what is happening today globally. Because one, the US-India tariff, we still don't know as to when it will be signed and what could be the terms. Because the more it's getting delayed, people are worried that it may not be in favor of India. Now you have the Russia sanctions which are hanging. You don't know as to when that will come. I think the timeline given by President Trump has been reduced now. So that's the other worry. Then closer home, you have earnings, and most of them have been mixed to negative. So from that point of view, I think the valuations also started looking a tad bit expensive. And last but not the least, the rupee also is getting weaker. So I think, all these factors put together are putting that pressure on the markets. And also we have seen some of the macros starting to slip, especially the industrial production. Although most of the other macros are positive, but whenever the sentiment gets negative and you see 1 or 2 macro numbers coming negative, that also has an effect on the markets. But then I would say, as of now, it's a decently healthy correction after a good move. But in case something comes negative on the US-India tariffs, I think that could make the markets go down further. So for the time being, I would say just wait and watch. I think technically about 24,500 would be a good support, and I would say that's the final support, because below that we could slip further.
Right, so we could slip further if there's a negative outcome in the India-US trade deal, but no real positive triggers right now, Mr. Baliga. Of course, you mentioned markets don't like uncertainty, and that is pretty much on display every day as we wake up to news. But also, it's not just the Indian retail investors who are losing the focus or losing that winning momentum. Even foreign portfolio investors have sold as much as 30,000 crore rupees worth of equity just in the month of June, in July, in the first 25 days of the month. Absolutely. And add to that, of course, the weaker than expected Q1 results. So a negative trigger could be a no deal with the US, but in terms of positive triggers, is there something for markets to really look forward to?
See, I think the only positive trigger, like I said, could possibly be the US trade treaty, which is in favor of India, or it is balanced. In that case, I think the markets will look at it positively. Earnings, typically towards the end of the earnings season, you normally don't get too many positive surprises. So don't expect anything much from the earnings season going ahead. And I think the other trigger possibly, could be monsoons, which anyway is continuing to be decently good. So I think that's the only positive trigger which can actually hold the markets up.
Well, let's hope that those positive triggers do come. But Mr. Baliga, there are also some trends which are emerging from what we've seen on the Indian stock markets. And one of them being that the IT sector, not just the Q1 results, but even its lack of innovation in building AI products is something which has really pulled down the mood of markets sustainably. And another thing that we are noticing as a trend in the markets right now is that investors are not really adopting the buy on dip philosophy. If anything, they are actually doing a sell on high philosophy. So not sure how that's really going to augur well going forward, especially also in the context of US markets, which are touching and breaking record highs, and that knock-on effect on Indian markets is missing. What's really going on? Why are we seeing this sort of a divergence, one between US and India, and second between just the pure investor strategy? The bullish strategy of buy on dip is now actually turning into what many are calling a bearish strategy of sell on high.
I'm not too sure whether investors are really, like at least the retail Indian investors, I don't think are really selling on a major bounce back, except for possibly those people who have been stuck. Okay. I think the pressure is mostly from the FIIs, which you rightly said, having major sellers in July. And the reason for FI selling is clearly whatever I said earlier. About the trade issues. We have the earnings which have started disappointing, and importantly, the rupee, which has turned weaker. So I think all these are the factors which are making the FI sell. At the same time, you have the US markets performing. So naturally, you have funds moving to a market which performs better as compared to a market which is underperforming. So right. I think that's all the reasons. But when you look at the domestic investors, I think that's the support which they are providing. Otherwise, the markets would have fallen more.
That's right. Of course, domestic retail investors really holding the flag high, if you can call it holding it high right now. But with the FPS sell-off, I think the retail investors are here to save the day. And let's hope that story continues. But Mr. Baliga, I want to bring some other specific points up right now and help us understand if these are likely triggers that could cheer the mood of the market. First up, another rate cut by RBI, potentially maybe not August 6th. Of course, we will get to know what the rate decision will be by the RBI MPC. But do you think that another rate cut by RBI or talks about lower inflation leading to a potential rate cut, and that's something the finance ministry is also hinting towards, is something that could cheer the mood of the market?
That can cheer the mood of the market, but my personal feeling is that after a 50 bips cut last time, which was a surprise cut as compared to the expectation of 25, I think we could have a status quo on August 6th. But then if you're talking of the rest of the year, rest of the calendar year, I clearly expect either 50 bips cut maybe at one shot or maybe in two installments of 25 bips. But then I think the commentary would be positive. That's what could actually support the markets and possibly not a rate cut.
Right, perhaps commentary, not a rate cut. Point number two, sir, good monsoon. Of course, we are seeing signs of a good monsoon, but good monsoon leading to higher consumption, especially in rural markets. Is that something which can lift the mood of the market?
Exactly. That's what I said, that possibly that could be one trigger going ahead.
Right.
And typically we see that trigger coming more towards September, more towards the festive season. So there is an expectation that the festive season this year could be better than what we have seen in the last 2 calendar years. Mm-hmm. And again, there is some more time left for that. So that's not an immediate trigger.
All right. And what about salary increments? Of course, it's that time of the year while we are seeing quarterly earnings are disappointing, but salary increments, more disposable income in the hands of investors, is that likely to find its way into the stock markets?
No, see, typically the increments happen in April, and we've already had the tax cut, so which is positive for the middle class, especially the urban middle class. And I think that's already there in the prices, because we had seen some amount of bump up in consumption, but then the sort of earnings which have come for the FMCG companies clearly point to the fact that we should be waiting for the festive season to see a major bump up. So I don't think that will have too much of an effect. But yes, your 8th pay commission is something which the market is looking forward to, because that could actually increase consumption across. So these are a couple of one has to wait for. But right now, I don't see that trigger playing out quite soon.
All right. And what about everything that is happening in the US and likely to happen this week? Because this is going to be a news-packed week in the US as well. To begin with, there are going to be quarterly earnings in US which start this week. Then, of course, the US-China trade deal talks are on in Sweden. Then today, US time, we will also see the US Consumer Confidence Survey and the results of that, followed by the US Federal Reserve's decision on interest rates. Despite Donald Trump's massive protests against Jerome Powell, we don't know whether those rate cuts are going to come or not. Unlikely, but some expect that it might just be a surprise move. And then, of course, US inflation data on Thursday, followed by the US jobs data on Friday. So a lot of triggers this week for the US economy. Any of these likely to impact the Indian economy, sir?
Yeah, I mean, see, like whatever positives are there, which could be announced for the US economy, will actually make the FIs invest more in US and possibly pull out from India. So I think that is the sort of a risk which we carry, at least in the short term. Longer term, clearly, I think the Indian economy would be an outperformer. So I'm not really bothered about FIs coming back in the longer term. Yes, I think they will have to come back because, if you want to get that alpha in your portfolio, you have to be investing in emerging markets, which are possibly performing much better than the rest of them. So typically, I think FIs would surely come back. But short term, yes, I think we have these issues on hand. And the other point which I would like to also bring in is the sort of layoffs which are happening in the IT space.
Right.
I think it's just the beginning. And we could have much more falling. And that's one thing which can possibly have an effect on consumption to a certain extent going ahead.
Right, of course, IT layoffs is the big story, and in fact statements coming from the IT ministry as well as from NASSCOM, and many now believing that the IT sector is at this tipping point, inflection point right now. And some HR experts that we've spoken to, Mr. Baliga, are saying that the problem or the epidemic may not be restricted only to IT companies, and these layoffs by virtue of AI and AI required solutions could actually spread across other industries as well. So, one final question to you. IT stocks the only ones to be worried about, sir, or should this layoff threat be viewed across other sectors as well?
As far as IT is concerned, yes, I think this will be across, all the larger ones as well as the mid-sized ones. And the other threat which is there for the IT sector as such, at least the listed entities, is that the large customers are setting up global capability center.
That's right.
I think this could be the other threat as far as the IT sector is concerned. And because of AI, if there are layoffs in the other sectors, that would be positive for those sectors because they would be actually reducing cost. The same thing can happen in IT, but I think that's going to take much longer to reflect on the balance sheet as compared to the other sectors where there could be a layoff because of AI.
All right, Mr. Baliga, let's leave it at that. Thank you so much for your time this morning. Meanwhile, we are seeing slight recovery in the markets. In fact, markets had started with slight cuts, but that seems to now be paired out and the Sensex is now flat. Before we slip into another short break, let's look at the other global stories that we are tracking for you. Chinese and US officials complete the first day of fresh trade talks in Stockholm as both sides try to extend a fragile truce amid US President Donald Trump's escalating tariff push. Donald Trump issues a 10 to 12-day ultimatum to Russia to end the war in Ukraine or face tough new sanctions. Trump says he's very disappointed with Putin and is no longer interested in talks with the Russian president. Ukraine President Volodymyr Zelensky hails Donald Trump's determination after the US president shortens his own 50-day timeline for ending Russia's war on Ukraine. At least 5 people, including a police officer and the gunman, killed in a mass shooting in central Manhattan, marking the 254th such incident in the US this year. US and Canada hold intense talks with just days left to avoid a 35% US tariff on Canadian goods. Prime Minister Mark Carney warns a no-tariff deal remains unlikely but says a compromise is in sight. The European Union defends its newly signed trade pact with US President Donald Trump despite criticism from some capitals and business leaders who call the deal a capitulation. The Vatican's Real Estate and Investment Office reports a 62 million euro profit for 2024, up 16 million euros from last year, marking a rare moment of financial good news from the Holy See. Heavy rains lashed northern China, killing at least 30 people in Beijing and forcing evacuation of more than 80,000 people as landslides and floods sweep across the region. And Thailand's military accuses Cambodia of breaking an hour-old ceasefire, saying clashes continue along the contested jungle border. These stories on the other side of the break. You're watching Morning Brief at 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
भाई ऑन रोड या ऑफ रोड?
रोड ट्रिप पे किस बाइक की सवारी होगी, ये खूबसूरत चिंता आप करिए। 2 व्हीलर लोन की चिंता हम संभाल लेंगे विद स्पॉट अप्रूवल एंड लोन अप टू 95%।
Light, camera and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Hi, this is Baman Irani.
Hi, this is Karishma Tanna. Hi, I'm Nushat Bharucha.
Catch this conversation on News 9.
Catch this conversation on News 9.
Catch me and this conversation on News 9.
Hi, this is Shahid Kapoor and catch this conversation on News 9.
Welcome back. Chinese and US officials wrapped up the first day of fresh trade negotiations in Stockholm on Monday as both sides seek to extend a fragile truce in the face of escalating tariffs under President Donald Trump's global trade agenda. Now, the talks, which follow President Donald Trump's newly struck 15% tariff deal with the European Union, ended first day of talks with no details shared publicly. Both sides now prepare to meet for the second round of talks on Tuesday. Earlier this year, the two major economies imposed triple-digit duties on each other before agreeing to a temporary tariff truce in the month of May. That 90-day pause is due to expire on August 12th, but media reports suggest officials may seek to roll it out further during the Stockholm talks. Under the current agreement, US duties on Chinese goods are capped at 30%, while China's retaliatory tariffs have been reduced to 10%. US President Donald Trump on Monday issued Russia with a dramatic new deadline of 10 to 12 days to end the war in Ukraine or face tough new sanctions as he met UK Prime Minister Keir Starmer in Scotland. Saying he was not very interested in talking to Russian President Vladimir Putin anymore, the US President said he was very disappointed with Putin over continued strikes against Ukrainian civilian targets. Here's more.
U.S. President Donald Trump on Monday said he decided to give Vladimir Putin a shorter deadline to show Moscow was making an effort toward ending Russia's war in Ukraine.
What is your new deadline? What
I'm going to make a new deadline of about 10 or 12 days from today. No reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made.
Trump's remarks come as he met with British Prime Minister Keir Starmer in Scotland. He said he was disappointed in Putin's continued aggression against Kiev.
We thought we had that settled numerous times, and then President Putin goes out and starts launching rockets into some city like Kiev and kills a lot of people in a nursing home or whatever. You have bodies lying all over the street. And I say that's not the way to do it.
There was no immediate comment from the Kremlin. Ukraine welcomed the statement. President Volodymyr Zelensky's chief of staff thanked Trump in a social media post for, quote, standing firm and delivering a clear message of peace through strength. Trump, who has expressed annoyance with Zelensky, has not always followed tough talk about the Kremlin with action. He often cites what he deems a good relationship with Putin.
So, Vladimir, thank you very much. Thank you.
Trump made his initial threat on July 14th.
And we're going to be doing very severe tariffs if we don't have a deal in 50 days.
He said he would impose 100% secondary tariffs on countries that buy Russian exports unless Moscow agrees to a major peace deal with Ukraine. That 50-day deadline would expire in early September. The threat mirrored an announcement in March that the U.S. would slap tariffs on buyers of sanctioned Venezuelan oil. No such tariffs have been imposed since, and Venezuela's exports of oil have jumped.
Moving on, at least 5 people, including a New York Police Department officer and the suspected gunman, were killed following a shooting incident on Monday in central Manhattan. This was the 254th mass shooting in the U.S. this year, according to data from the Gun Violence Archive. Local authorities confirmed the incident took place around Park Avenue and East 51st Street and had since been contained, and the lone shooter is dead, without providing details about the identity of the suspect. The area is home to several 5-star business hotels as well as a number of corporate headquarters, including Colgate-Palmolive and auditor KPMG. Listening to what New York City Mayor Eric Adams had to say.
This is Mayor Eric Adams, and I'm here at the scene of 51st and Park Avenue. Unfortunately, we had a shooting here with multiple injuries. The perpetrator, the known perpetrator, is neutralized at this time. Those who are in the building, we're asking them to remain inside as resources are doing a 4x4 search. We believe, again, the perpetrator is neutralized at this time. We're going over to the hospital to speak with the family and loved ones involved in this incident. We did have a shooter with multiple injuries at this time, but the perpetrator is neutralized.
Meanwhile, Canada and the U.S. are in intense negotiations with just days to avert a threatened 35% tariff on Canadian imports. Prime Minister Mark Carney told reporters that while a no-tariff agreement is unlikely, both sides are aiming for a deal by August 1st. Listen in.
Negotiations are at an intense phase. It's a complex negotiation. You see with the various trade deals that have been agreed by other jurisdictions, European Union yesterday, Japan before, Indonesia, etc., the United Kingdom, that there are many aspects to these negotiations. We're engaged in them, but the assurance for Canadian business, for Canadians, is we will only sign a deal that's the right deal, that's a good deal for Canada. We're representing Canada, we're standing up for Canada. The United States and Canada can do many good things together. We have done that in the past. We can do more in the future, but on fair terms for our country.
Meanwhile, European governments and businesses expressed cautious relief at the new framework agreement with the US. While the deal is seen as uneven, it helped avoid the risk of a full-blown trade war and allowed breathing room for industries sensitive to sudden tariff shocks. Here's how the European industries reacted to the landmark deal.
European governments and companies reacted with both relief and concern on Monday to the EU-US framework trade deal. Some saw it as unbalanced, but were happy it avoided a deeper trade war. The agreement will see the US impose a 15% import tariff on most EU goods. It's half the previously threatened rate, but much more than what Europeans hoped for. Cynthia Alcidi is a senior researcher at the Centre for European Policy Studies.
I think this is a glass half full, half empty. It is half full because there is this sense of relief and that the worst outcome is excluded, where the worst outcome could have been 30% tariffs or even a trade war. On the other side, this is not what the EU wanted. I mean, the EU asked for a zero tariff trade agreement, and this is not what we had.
The 15% baseline tariff is half the threatened number, but compares to an average US import tariff rate of around 2.5% last year. Many of the specifics of the deal were not immediately known. The agreement included an investment pledge above the $550 billion deal signed with Japan last week. Hildegard Müller is president of Germany's auto association, the VDA. She was relieved a deal was struck, but warned industry would still take a hit.
The deal will also burden consumers in the United States. It will not only have consequences for Europe. In the long run, products will become more expensive. I believe that this is why it is not a good day for international trade or for consumers.
German Chancellor Friedrich Merz welcomed the deal as it averted a trade war, while French government ministers said the agreement had some merits but wasn't balanced. One leading French minister said more talks would be needed before the deal could be formally concluded.
And time for another short break, but coming up on the other side, more stories from around the world. You're watching News 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
खूबसूरत सी तुम कोई चिंता करो, पीछे भरोसा खड़ा है तुम्हारे, तुम नया कल बनाते रहो।
जब कोई हमारी बाकी चिंताओं को संभाल लेता है तो हम कर पाते हैं खूबसूरत सी कोई चिंता। टाटा कैपिटल में हम आपकी हर फाइनेंशियल चिंता को संभाल लेते हैं ताकि आप करें सिर्फ खूबसूरत चिंताएं।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कर आता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Welcome back. Now, luxury brands may have dodged a major tariff disaster in the new EU-US trade framework, but they still fear that a slumping consumer demand may limit their ability to raise prices. As margins tighten, firms must find a careful balance between premium positioning and market sensitivity. Take a look at this report.
Luxury giants Chanel, Louis Vuitton, and Dior may have dodged the worst in U.S. President Donald Trump's trade deal with the EU, but a new 15% tariff on European goods threatens to deepen the pressure on an industry already faced with slumping consumer demand and fading pricing power. While the fresh duties are below the hefty 30% tariff that Trump threatened just weeks ago, they're a far cry from the zero-for-zero tariff deal the EU was hoping to clinch. Some high-end labels say they will be able to draw on pricing power to offset the cost of tariffs, but analysts and industry experts warn some players have limited wiggle room after a series of outsized price hikes, which have driven a chunk of the brand's profit growth. Big luxury companies raised prices by 33% on average between 2019 and 2023, according to RBC estimates. The price tag of Chanel's classic quilted flap bag, for instance, more than tripled between 2015 and 2024, while the Lady Dior bag and Louis Vuitton Keep All travel bag more than doubled, according to UBS analysts. Meanwhile, the sector lost 50 million customers last year, according to consulting firm Bain, as economic pressures and price fatigue dampened appetite for designer clothing and handbags. UBS estimates that a 15% tariff will require luxury brands on average to raise prices by around 2% in the U.S., or around 1% globally if they want to avoid widening regional price gaps, or face an impact of around 3% on earnings before interest and tax. Such hikes may prove challenging while the latest round of luxury companies' earnings shows little sign of a rebound.
And in a rare dose of financial good news from the Vatican, the office managing the real estate and investments reported a 62 million euro, that's around $63 million worth of profit in the year 2024. This is up by about 16 million euros from the year before. The administration of the patrimony of the Apostolic See attributed the gains to stronger investment returns while also crediting the stability of real estate income. Some 46 million euros of the profit will help cover the Vatican's operating costs. Remember, the upbeat results come just as Pope Leo XIV begins tackling the chronic structural deficit and looming 1 billion euros worth of pension shortfall, challenges seen as pivotal for the future of Vatican finances. And before we end, we'll leave you with visuals from Turkey, where citizens are battling a record-breaking heat wave as temperatures hit a staggering 50.5 degrees Celsius in Silopi district. The suffocating heat has sparked dozens of wildfires and forced widespread precautions. And that's all we have for you on this edition of the Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
ये वाला तो गूगली है,
वो वाला,
ये वाला तो सिक्सर है।
कौन सा फ्लेवर बिजनेस बढ़ाएगा? ये खूबसूरत चिंता आप करिए। बिजनेस लोन की चिंता हम संभाल लेंगे विद कोलैटरल फ्री लोन